Hello guys, welcome to my channel. And this is the US30 Ghost. US30 Ghost. You can catch me on Instagram, US30 underscore Ghost. You can catch me on YouTube. My YouTube channel is US30 Ghost. And basically, what I do is let me introduce myself properly to those who don't know me. Basically, what I do is I give you the forex content, everything that involves forex and the markets, just everything that is financial when it comes to forex, from brokers to use, from market analyzing, from strategies and everything, and how to basically use forex to make money. That's what I do because I believe if people can get more financial education, they can make money. They can make money. And so what I do is I provide you with information, and if you want to keep listening to me, if you enjoy my videos, you like, you subscribe, you comment, anything, because this a channel for you as a forex trader and as people who are like beginners in forex. So let's get to it, man. Let me not talk too much. So today's video we're going to talk about market analyzing, which is whereby we use SMC. SMC is called Smart Money Concept. It's a strategy that people use to analyze or break down the market from higher time frames to lower time frames. Okay. And under that, we have supply and demand, we have liquidity, we have risk management. And I think this video, if you are a beginner, you should watch it because I got something for you. The secrets that are in the markets. I have, how to trade certain things, man, that people didn't really know. You can just trade this and trade this without by combining them. So if you have a trading plan and if you have a trading strategy, and if you know how to break down the market, if you have a legit broker, if you have risk management, I think if you have these things and your psychology, that bigger part of forex is psychology. If you have practiced your psychology and you're like, yeah, if you have that part, that psychology part, psychology part, you can make money in forex because forex is it's tricky because you need to be consistent. Every business needs to be consistent. You understand? You need to be consistent in what you do. If you can be consistent in what you do, you would never make money because it takes one bad trade to wipe all of the whole month progress. Imagine, it takes one trade to wipe everything that you have worked on. So if you are disciplined, you stick to your trading plan. You create a trading plan so that a trading plan works for you, and you trade your trading plan. You create a trading plan and you trade your trading plan. English, yeah. So let's get to it. Let's get to it. Okay. Um, this is what we would be doing, man. This is what we'll be doing. I'll introduce my strategy later. I have a strategy that I want you to test and get to the charts and see if it works. So we are on daily time frame. And we are looking at US30 as it has been performing very, very, very bullish recently. So you're going to learn a few things which involves market breakdown using SMC, using supply and demand, everything, just from higher time frame to lower time frame. Understand? So we're also going to involve chart patterns, which are very good for you if you really know how to enter using chart patterns. You understand? Because the market may manipulate, but if you have the entry, like you have your risk, you're managing your risk, you're managing your money, you can make money. So what I'm basically going to start with is on the daily time frame. This is a daily time frame. These are my tools that I use. This is called a trend line, a horizontal line, horizontal ray, a vertical line. This is a Fibonacci retracement. This a retracement, like when the market is moving like this, you can see how the market would retrace and actually get a sniper entry using the fib. Using the fib. I like using the Fibonacci on currencies. I love using it on currency. I didn't say it doesn't work here, but I love using it on currencies. Ne? Then you have this rectangle. I use it for my order blocks and for my inducements. And this just for my trend lines where I have like touches. I see how the market touched and how it supports whether it's dynamic or whether it's horizontal. So that this is where my curve, triangle, and all this. This is long position. Let me show you. Let me show you. Okay, this short position and this is long position, right? So let's look at supply and demand. I want to start with supply and demand. I want to start with supply and demand. So when you have something like this in the market, when you have something like this in the market, uh-huh, when you have something like this in the market. So you realize that you have a double top here. Let me edit this. I think I changed it. Okay. So let me say you have the market giving you what you call a double top. Okay. So you had a bullish market, right? It came to your resistance level, came to your resistance level, came to your resistance level, it touched, came back down, created a lower low, yeah? It came back to your zone, broke this lower low, which is called a change of character. It broke this low, right? Broke this low, and you look for the candle that broke this low, right? You look for the candle that broke that low. So that candle would become your supply zone, your supply zone. So that candle will become your supply zone, and you wait for the market to come back to your supply zone so that you can put your sell orders here. You put your sell orders here. This is how you put your sell orders. After when you get to learn about liquidity, I'm going to explain why my stop loss is going to be about 10 pips above this. Oh, then your target will automatically become your look left. This is whereby you look at a certain demand zone or something where low, like on your left. So that's your target. Be like I had the market. It be like I had the market moving like this, like this, like this, like this, like this, like this, something like this. Oh, yeah, you're saying I have the market moving like this, so and this is going to become my target this year. It's going to become my target. Or you can use the 90% rule whereby you take the low, since this is the law that gave us this high, right? So you can say, yeah, no, I put my entries, my take profits here. So this is what you call a supply zone. This is what you call a supply zone. Wait, sorry. This is what you call a supply zone. That's what you call a supply zone. So you see, that's your supply zone. So you look for these zones where the market changed direction from being bullish to being bearish, or from being bearish being bullish. Né? This was a supply zone. Now we're going to deal with a demand zone. Né? Okay, a demand zone. Demand zone. Let me show you what a demand zone is. So you have a bearish market. A bearish market, it gives you a low, comes back up, gives you a high. Hello. Huh? Uh-huh. 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 Yeah. Okay. When you have the market going down, né? When you have an impulse, when you have the market going down, né? Okay, the market gives you lower lows, lower lows, lower lows, lower lows, lower lows, né? Then it gets your zone, a certain zone, then it supports, it supports at the zone, né? It supports the zone. And if you have what you call key levels, you might find that the market is supporting at a certain key level. Yeah. So key levels are those zones that you mark in higher time frames, like the weekly, the daily, where they influence the change of the market direction, like at a major zone. Like if it's daily, like your markets daily, you know that when the market gets to the zone, it has to react a certain way. You understand? If the market might come and touch the zone first, come back, touch the zone again, and break your significant high. This is the high that matters. This is the high that the market created. So you wait for the high for the market to break your give you a change of current. Né? Give you a change of current, and you wait for the market to come back to your zone. You have yeah, identify the candle that broke, that gave you a change of character. So you have the candle. This is the candle that gave you a change of character. So let's mark it as demand zone POI. Ne? Demand zone POI. So when you have it's too much, it's too much. Let me make it 16. So you have your demand zone POI, right? It's a point of interest. POI means point of interest, right? And this is becoming your change of character. This is your change of character. Change of character. Ne? This is your change of character. So what's this now? Okay. So this is a change of character, and the market start making a lower high, higher high. This is a higher high. You're expecting a lower high. And where is it best to get your lower high? This is where you get it. This is where you get it. So, as I said, sometimes you use, you identify the market imbalance here. You might find that the market was moving at a certain uh, pace or a corrective pace here. Then start getting in an impulse. So what you can do is to identify a market imbalance. Look, I'll teach you about market imbalances, but now let's focus on demand zones and this. So if you enter here, if you enter here, if you enter here, and you've seen a big move, like this is a big move, you have identified this on a big time frame. Understand? This is a big time frame kind of thing. So you have identified this, so this can be your target. It can be, if you know what you're doing, if you don't want to take so much time in the market, entries here. Let's say you have in an 1 hour time frame, entries here. This is where you get your thing. This is where you get your profits, right? And this is what you use. Uh-huh, uh-huh, uh-huh. This your target. This is your target, right? This is your target, and this is how you get to enter. See how much you're risking. See how much you're risking. You're risking, okay, here, okay. Then when it gets to yours, this, and it gets to this, and you know you're risking this to get this. You're risking this to get this. And this is your demand zone. Okay? This is your demand zone. So I want us to look at this. Let's identify supply zone and demand zone in the markets. Now you've seen supply zone, and you've seen demand zone. Yeah? So let's get to the markets and let's identify those. Let's identify those. We can start here. Think for 20 or something. For 8. Was it for 8 or for 20? 8 was 1, 2, 2, 0. 2, 4, 8. 240. Sorry, skis man. Let's move to a time frame like a 4-hour time frame so that we can get our supply zones clearer. Let's go. All right. Okay. We had the market being bullish. Yeah. Let's go down. Let's go down. Yes. This zone. This is the zone. Okay. You had a bearish market. You had a bearish market. You had a bearish market. Then the market came down, created a low, right? Market came down, created a low. Market came down, created a low, right? And after the market created this low, the market created this low, created a high. You get to the market, you see this, you're like, yeah, something should happen here. It's created high, right? And if you get to, we're going to break this down to a smaller time frame, but I want you to say something. Okay. Market gave you a good support. Remember, this is a 4-hour time frame. The market gave you a good support here, right? And after the support, the market gave you something like this. I want you to see clear. Let's zoom in. Right? Let's zoom in. Right. So came down, pretty low, came back down, supported, and took liquidity here. Came back down, created a high, came down, broke. This is the high that matters here. This is the high that matters here. High that matters is right here. Right. Okay. And which candle broke your high? This is the candle that broke your high. This candle that broke your high. Right there. Right there. Right there. Okay. So what? Come on, man. Okay. Let me mark it again. Let me mark it again. So this is the candle that broke your high. And when you get to a smaller time frame, you get to modify this candle so that you can get a better entry. So we're marking it this candle demand zone POI. POI stand for a point of interest, right? So this is the point of interest. We had a very good low here, like very good support here. So you are looking forward to getting a reaction when the market comes back to your zone. So what you do is wait for the market to come back to your zone and you look for a sniper entry in smaller time frames. Understand? In smaller time frames. So yeah, like I said, this then becomes your zone. This then becomes your zone, right? And your target, this is your target. Is your target. Target here, stop loss below. That's what we are talking about. This is what we're talking about here. Getting this from this. So you move from a larger time frame, now you are going to a smaller time frame. I love using a day time frame, a 4-hour time frame, then I get to my 1 hour, then I get to my 15 minutes and 5 minutes for the sniper entry. Daily 4 hour, 1 hour, 15 and 5 for my sniper entries. Like I use SMC together with chart patterns, imbalances, and I see what I have in the market. If I can trade an imbalance, or if I can trade SMC with chart pattern, or just I just look at my chart and I know what I want from my chart. You can use certain different things you want in the market. Always we don't like uh, unless the market the same. That's what I'm saying. So let's move to an 1 hour time frame. 1 hour time frame so that we can get our entry. We can modify our zone so that we can get a specific entry we want. Okay. So then we correction slow. Correction slow. First, my network is trash, man. I don't know why it's so slow today. I don't know why it's so slow today, but okay. You can afford to be little patient. You can afford to be a little patient. So while it's still loading, guys, you have what you call chat patterns. Oh yeah, it has loaded. Oh, what a beautiful move. So while it's still loading, I said we have what you call chat patterns. Chat patterns is something that you use to identify the movement of the market, how it's moving. Like when the market is supporting uh like okay, dynamically, like slanting. I don't know what you call it. You can identify those points the way the market is supporting and when the market is resisting to go up. So that's how you use chart patterns. I'll explain how you draw chart patterns using trend lines and how you know this is a continuation chart pattern and this is a reversal chart pattern. So if you have that skill, I think it's gold. So let me get to our main focus here. This is our main focus here. This is our main focus here. This is our main focus here. So remember, this is your high, your target, and this is your to-do-do, 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 to-do-do. And when you're drawing, look at this beautiful support here. The market actually took 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, more than 20 hours supporting. So you're expecting a certain kind of move here, expecting a certain kind of move here. So let's get to it. We're looking for the candle that broke our zone, the candle that broke our high. This was the high. This was the high. This was the high. So let's modify it to this is the last. Whoosh. Let me show you something. When we have a bullish movement, when you're drawing your demand zone, you're looking for the last bearish candle before the market became bullish. So this is the last bearish candle you had before the market gave you a bullish engulfing candle. This is a bullish engulfing candle. As you can see how big it is. So you have this candle giving you this move. So this is the most important candle you have. This is the bearish candle before the bullish move. That is what you call your demand zone, right? Your demand zone. This is where the market took a decision that we are going up. Okay, let me explain. Market came down, the bulls took it up. Market came back down, bulls took it up. Bulls, bears, bulls, bears, bulls, bears, bulls, bears, bulls, bears, bulls, bears. And right here on this candle, the market decided that we, as the market is going up, the bulls have won the war. This was the war. This was the bulls against the bears now. Understand? Also, this was liquidity. So people who entered here, looking at this candle, market came back down and move there. So this is where exactly you had your entry. Because this is where the market said we are buying because the bulls have won. So the bulls are driving the market up. Okay. So yeah, the market came back down to your zone, gave you a first touch here, came back down again, give you a second touch. So people who took entries here and put their stop losses here, what did market do? Boom, blow them out. Right? Yeah. So the market came back down again, took those entries and started going up. That's why it's best to learn smart money concept. So if we had this perfect entry, sniper entry, we would have hold the market for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 candles, our candles. And when the market starts going your way, you modify your stop losses to a certain level so that you don't lose that much money. You understand? So this is your demand zone simplified. And if you can identify this, wow. Okay. Then you have a bullish market going all the way up, and wait, this. Okay. And now again you go back to 4-hour candle, né? 4-hour candle. Why? Because we want to identify a supply and demand, and you start on 4-hour candle, né? I'll do My network is boring, guys. I don't know why it's doing like this. I don't know why it's doing like this. Why it's doing like this. Okay. Okay. So you're done with our demand zone. We can identify another one if you didn't get this one. We can look for another one so that you know what's what. But let's not waste that much time because I think okay. So guys, let's look for a supply zone and I think it's best to use this one. You can use this one as the method is taking that direction. And you can also use that, also use that where the market came back to your zone. Where the market came back to your zone. So we're identifying it here, then we're breaking the market down to a small time frame so that you can get the exact work which you need. So market was going up, it reversed to down low. Let's zoom in and see what we had. Let's see what we had. Let's see what we had. Okay. Let's see what we had. Boom, 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 boom. Okay. So the market was giving you an impulse. Came back down. Draw the Muslim one. Draw the Muslim one. So this is what the market gave you. And as you can see, the pattern is a very good pattern, right? It shows you that market was going up and finally it reversed, right? So as the market went up, it gave you this zone before. So it's this zone. Okay, right? This zone. Right? And this was the high. Give you a high, give you a low, consider high, uh, broke your low, then the head and an impulse. So let's look at it. Let's break it down. Let's break it down. This is so exciting, bro. This is so exciting. So you had the market breaking your low, which is a change of character here, then coming back to your zone and going up. Did this candle break? I want you to be certain of what you're doing. Look at this candle. Let me put this here. Let's use a horizontal. Let's use a horizontal. Yeah, come in. So let's use a horizontal so that you're setting if the market broke your zone or it didn't break your zone. So the market didn't actually break your low with that. Just broke it after, came back down. Okay. So from there, let me show you, give you this high. Okay. If it is high, broke the high, came back down, broke this low, came back down. So you have this low, then you have this low. You're going to see which low it is from a certain time frame, which is 1 hour time frame. So we're going to see exactly what happened because you can't see what exactly happened. But you know the market came back down. Oh. What happened, my friend? How? Guys, my network is so frustrating, but I think you just bear with me and okay, there it is. That is right. So when you enter here, let's just go to another time frame, man, before you just start making so big deals out of this. Okay. Yeah. 60 minutes. You guys would have to excuse me about my network. I don't know, man. Mm, I don't know. So, as we said, this is what you do. You start on a higher time frame, which is your H4. You get to your 1 hour, where you get to your beautiful, beautiful. Yeah. So you had market giving you this high, give you low, high, low, tata, broke this low, broke this low, broke this low, broke this low, which is a change of character here. This is where your change of character is. This is where your change of character is. Because the market broke this low, right? Market broke this low. Market broke this low, showing that the market is now selling. We're looking for the market to give you a lower high, lower high, lower high, but gave you a lower high, then came back and broke the low, giving a lower low. So this now the market saying, this is now the market saying, this is not the market saying I'm selling. This is the market saying I'm selling. So what do you do when you get to this? You mark the candle that broke your low. You mark the candle that broke your low. Let's zoom in so you can see clearly, guys. Let's just zoom in so you can see clearly. So you mark the candle that broke your low. Which candle broke the low? Which candle broke the low? Which candle broke the low? So this is the candle that broke your low. So you're saying I'm looking for, no, this is your low, right? And you look for the candle that broke that's low. Which one was it? This was your candle. The last bullish candle before the bearish movement, right? Okay. The market broke it. After this impulse, came back down to your zone and retested, then went down. And which one is your target? When you enter here, right? Enter here. Where is your target? This is your target. You look left, your previous low. This is the low that gave us the high. It's called the 90% rule. This is the 90% rule. When you enter here, you're knowing that you're going to exit there. So let's modify this 1 hour, right? So let's modify our risk management. We're going to go to a small time frame so that you know that this is how I'm risking and this is how I'm aiming. So you can't enter on a big time frame. You have to go down to 5 minutes, 15 minutes and 5 minutes for your sniper hint. So let's go to 15 minutes. So this will be it about demand zone and supply zones, guys. And the next part, we would look at liquidity and look at chart patterns and look at my trading strategy and how to construct your trading plan and how to respect your trading plan. Also, your risk management and everything in there. So this is how you move. This is how you move. It's taking so long to load, guys. It's taking so long. I'm sorry about that, guys, but I haven't done this. I promise I'll do that on the next lesson. But anyway, I think you've seen what I meant and you've understood how you enter even this year, how to manage your risks and everything. So thank you guys, and thank you very, very much. Welcome to my channel. This is where you get your Forex content from brokers to trust and how to leverage your account and what to do when you start investing your money. Like when you start giving attention to Forex, this is what you do and this is how you should move. This is how to respect the market. You have to learn certain financial I think it's called financial information. You have to know something about finance, how to manage your finances, how to deposit from your bank account into this, how to withdraw and what it takes, and all that process of going to the markets. I think if you have a certain age or certain belief that you can make money in the market, you can make money in the market. And all it takes is the skill, man. Invest in your skill. Don't let people trade for you because people will start scamming you. So just welcome to my channel and please subscribe and like, comment, because I'm looking forward to hearing from you because I can't do this without you. And the broker that I use is not FX. Not FX now has certain bonuses when you register with the broker. You can choose your leverage can see your withdrawal methods, and it's actually a proven broker that you can use. I'm not any how associated with not FX. I'm just saying this is the broker that I used, and I think if I trust the broker, you also can trust the broker because I've seen what it can do. So check it out at register. I'll give you my um referral code so that you can register under me. So thank you guys very much, and let's look forward to our next part. And please subscribe to my YouTube channel.